A 19-year-old college student with $800 turned it into $20,000 in 3 weeks. But that's not the crazy part. The crazy part is how 50,000 other teenagers did the exact same thing at the exact same time, and Wall Street billionaires lost their minds. Quick question, what were you doing with money when you were 19? Probably not taking on hedge funds and winning, but Gen Z is rewriting every rule about investing, and some of the stories will blow your mind. Others will terrify you. All of them will teach you something. Here's what's happening. While millennials were told to save pennies and wait decades to invest, Gen Z grabbed smartphones and said, "Watch this." They're investing with lunch money, learning from TikTok videos, and making moves that would make Wall Street veterans sweat. The average Gen Z investor started at age 19. Compare that to Gen X, who started at 35. That's 16 extra years of compound growth. But it's not just about starting early, it's about how they're doing it. Traditional investing was gatekept by brokers in suits, demanding minimum investments of thousands. Gen Z said, forget that, and found apps where they could buy fractional shares with $5. They turned investing from an exclusive club into a social movement. Story 1, the GameStop revolution. Let me tell you about Tyler, the 19-year-old who became the face of a financial revolution. January 2021, Tyler was eating ramen for dinner and checking Reddit when he saw something that changed everything. Hedge funds were betting billions that GameStop would fail. These were the same firms that got bailed out in 2008, while regular people lost their homes. Tyler and 50,000 other young investors on Wall Street bets decided to fight back. Tyler scraped together $800 money he'd saved from his part-time job at Target. He bought GameStop stock at $20 per share. His friends thought he was crazy. His parents were worried. But Tyler had something the hedge funds didn't expect. Nothing to lose and everything to prove. 3 weeks later, GameStop hit $400 per share. Tyler's $800 became $20,000. He paid off his student loans, helped his mom with rent, and still had money left over. But here's what he told me that really stuck. It wasn't about the money. It was about proving that regular people could beat Wall Street at their own game. The hedge funds lost $13 billion. Tyler and thousands like him won, not because they were smarter, but because they were coordinated, fearless, and had nothing to lose. Story 2, the crypto queen. But meme stocks weren't the only way Gen Z was winning. Meet Sarah, a 21-year-old nursing student who discovered cryptocurrency in 2020. While her classmates were spending stimulus money on clothes and concerts, Sarah researched obscure crypto projects. She found Solana when it was trading for $3. Most people had never heard of it. Sarah spent hours reading white papers, joining Discord communities, and learning about blockchain technology. She invested $200, half her stimulus check and savings from her campus job. Her family thought she was gambling. Her friends called it fake internet money, but Sarah had done her homework. 18 months later, Solana hit $250. Sarah's $200 became $100,000. She became a crypto millionaire before she could legally drink alcohol. But here's the part that impressed me. Most, she didn't quit school or get reckless. She took profits, diversified into traditional stocks, and kept studying nursing. Sarah's secret wasn't luck, it was education, combined with calculated risk-taking. She told me, "Everyone said I was too young to understand investing. Turns out being young was my biggest advantage, because I wasn't afraid to learn something new." Story 3, the consistent winner. Not every Gen Z success story is about overnight millions. Sometimes the most impressive wins come from simple consistency. Meet Marcus, a 22-year-old who delivers food while studying computer science. Every week, he takes $50 from his earnings and splits it between 2 investments. $30 into an S&P 500 index fund and $20 into individual stocks he researches. No drama, no get-rich-quick schemes, just steady, boring investing. But here's what makes Marcus special. He started this routine at 18. 4 years later, his portfolio is worth $12,000. Not life-changing money yet, but he's on track to be a millionaire by 40. Marcus discovered something powerful. You don't need big money to start building wealth. You just need to start. His $50 weekly habit has grown into a $600,000 projected retirement fund, assuming average market returns. He told me, "My friends think investing is either gambling or something rich people do." I proved it's just a habit, like going to the gym. The earlier you start, the stronger you get. But let's be real, not every Gen Z investor is winning. For every Tyler who made $20,000, there's someone who lost their savings. Chasing the next GameStop. Reddit forums are full of stories about students who borrowed money to buy crypto, only to watch it crash. Young investors who put rent money into meme stocks and couldn't pay bills. TikTok influencers promoting scam coins that disappeared overnight. The same tools that democratized investing also democratized financial ruin. When investing becomes gamified, it's easy to forget. You're playing with real money. Jake, a 20-year-old from Ohio, learned this the hard way. He saw Dogecoin pumping and threw his entire $3,000 savings at it when it was near its peak. 2 weeks later, it crashed 60%. Jake lost $800 money he'd saved for 2 years working retail. The lesson? Gen Z's boldness is both their superpower and their kryptonite. The same fearlessness that creates millionaires also creates massive losses. So what can we learn from Gen Z's investing revolution? 5 key lessons. First, start with whatever you have. Tyler started with $800, Marcus with $50 weekly. You don't need thousands to begin building wealth. Second, education beats luck every time. Sarah spent months learning about Solana before investing. The winners aren't just risk takers, they're informed risk takers. Third, community matters. Gen Z doesn't invest alone. They share research, celebrate wins, and learn from losses together. Investing becomes less scary when you're not doing it solo. Fourth, technology is your friend. Apps have made investing accessible, affordable, and social. Use them, but don't let them turn investing into gaming. Fifth, time is your biggest advantage. Starting at 19 instead of 35 gives you 16 extra years of compound growth. That's the difference between comfortable retirement and financial freedom. The real Gen Z advantage isn't their apps or their boldness. It's their timeline. They have decades for mistakes, to become lessons, and small investments to become fortunes. Here's the truth about Gen Z investing success. For every viral story about someone turning hundreds into thousands, there are thousands of small, steady success stories that never make headlines. The median Gen Z investor doesn't have a six-figure portfolio. They have a few hundred or few $1,000s, growing slowly through consistent investing. But here's what's incredible. They're building wealth, while their peers are building debt. By starting early with small amounts, they're giving themselves the ultimate advantage time. A $100 monthly investment starting at age 20 becomes $1.3 million by retirement, assuming average market returns. Start that same investment at 35 and it becomes $430,000. The message isn't gamble your savings on meme stocks. It's start investing with whatever you have, as early as you can, and let time do the heavy lifting. Your challenge: open an investment account this week. Start with $25, $50, or whatever you can afford to lose. Research index funds or blue chip stocks. Join online communities where you can learn from others. Gen Z proved that investing isn't just for the wealthy or the middle-aged. It's for anyone willing to start, learn, and stay consistent. Comment below what's your biggest investing lesson learned? Like if you're inspired to start investing. Subscribe for more financial insights and generational money wisdom. The next market revolution is already brewing. Will you be part of it, or will you watch from the sidelines again?